Hello, my name is Rufaro Ojeri, your host today for Market Views, a show where we get the most competent analysts in the market to give their views on the most trending issues in the capital markets. Today in the studio is Zenzi and Hilton. Gentlemen, welcome.
Thank you for having us, Rufaro.
Thank you for having us.
Let's get straight into it. So SeedCo last week announced their Q3 results, highlighting that their sales volume had decreased, their revenue is increasing at a rate that's lower than the inflation rate. But besides that, their share price shoot. Hilton, what's your take on SeedCo?
It's quite interesting to note that for Q3, the volumes were down 40%, and for the 9 months, this is Q1 to up to Q3, the volumes were down 20%. However, the volume from wheat purchases was actually up, which is a 6% increase. It's also good to note that the Q3 volumes, inflation adjusted, was up 0.32%. As you highlighted, it is quite alarming to see volumes which are going up lower than inflation. So SeedCo it's a good counter. We should look into. It's quite liquid. So in terms of price discovery, we definitely know that whenever the price is up, it reflects that the demand for the counter is high.
Yes. But Hilton, I know you're a fundamentalist. In terms of your analysis of the financials of the company, what do you say? Are you bullish or bearish?
All right, fundamentally analyzing SeedCo. SeedCo is a rolling P of, this is the price earnings ratio of 62.5%. This brings the fair price to around 138. So it's quite debatable, but it's a good counter. Given that here on the Zimbabwe Stock Exchange, our prices are rarely driven by fundamentals, but by liquidity. SeedCo being a liquid counter, it stands in a neutral position where fundamentally it seems not to be so good, but on the ground, facing the facts and the experience on the market, SeedCo, it is a good counter.
Zenzi, I know you always have something to say. What's your take today on SeedCo?
SeedCo is a very interesting business. It's a very agro business, and you know, food is one of the things that you need today. You actually eat in the morning, and one way or the other, maybe you ate your CEO, and that's SeedCo benefiting from that. So in terms of my performance of SeedCo is actually undervalued with the current rate. I think my fair valuation is around 230, 240, and many interesting things that happens in SeedCo. Firstly, SeedCo in Zimbabwean market, in the Zimbabwean market, it controls 60% of the Zimbabwean market. And as you have known, when the budget was announced, 13% of the budget was allocated to agriculture, which is actually very interesting. And then going to the region and what's happening internationally, the SDG 1, where we are eradicating poverty, and SeedCo will benefit from that. And also going forward, also in terms of what the business is doing, the business this year, last year, His Excellency commissioned the SeedCo plan, which is actually worth 2 million, 3 million, which is actually going to reduce the grain cycle that SeedCo normally had, because the new seed dryer can take seeds with 35% moisture content and drying to become seed. So in terms of its business and its price going forward, it actually looks very good, and SeedCo has been exploring many markets, and it's also been in the market for 82 years. It actually shows in terms of how good the company is. And SeedCo also invests heavily in research and development, where in the last year we saw CS 414 new seed varieties, among others, which are being tested in Zimbabwe, Zambia, in Nigeria. Also, interestingly,
so are you bullish about SeedCo?
Yeah, I'm very much bullish about SeedCo. These are some of the things that I'm mentioning, that SeedCo is doing very well in terms of in its operations. Also, we saw them trying new operation in Zambia, Rwanda. They have tested new markets in Rwanda, which they are servicing. So the future is good for SeedCo.
So you're saying, in other words, forget about the decline in sales volume. Let's look at the future and see what SeedCo.
Yeah, and interestingly, the other point that I missed as well, in Kenya, in Zimbabwean market, it's an election period. So we are actually going to see an election-driven demand, where people are going to buy, where the government will buy people so that it will be re-elected into power next year. So that election-driven demand is actually going to cause a spike in the seed demand from SeedCo.
Thank you, Zenzi. So we also realized that CAFCA also updated their financials, their Q1 financials. So CAFCA highlighted that their exports volume increased and their conductor tons sold also increased by 3%. But CAFCA is a tightly held stock. And Houghton, I know for some time now you've been looking at CAFCA. What's your take on CAFCA?
CAFCA is quite interesting to look at. As you say, CAFCA is tightly held by 70% of the shareholding being on the foreign registry, which is the London registry. So in terms of liquidity, it is not so liquid. As I have highlighted before when you're talking about SeedCo, the Zimbabwe market is mainly driven by liquidity rather than fundamentals. CAFCA is greatly positioned in the development, in the infrastructure development here in Zimbabwe. The power generation, we saw new plants being opened in Wange, and whenever there is such high demand for copper cables, CAFCA is the your go-to company. So in terms of prospects and future revenues, we expect CAFCA to have an increase. But going back to the results they gave, they have about 3% increase of foreign exports, which is now about 615 tons, which is quite good considering that most companies have been affected by the global COVID-19 pandemic, and also the logistics industry being affected. So a company recording positive revenues and also positive volumes, it's good for a company that mainly that has a significant portion of its revenues coming from exports. So CAFCA is actually good. They also highlighted about 35% volume increase in exports, which is quite significant, and we expect more as we are in 2022 with a better global economy from COVID-19.
Actually, an interesting statistic about CAFCA is that its year to date, as of today, is still at 0%. It speaks to what Houghton was talking about in terms of liquidity. But I usually know Zenzi as someone who always have opposing opinion. What's your take on CAFCA? And
CAFCA is share the same sentiment as Houghton. CAFCA does really well, and you see that locally we now have a construction boom, which CAFCA is one of the beneficiaries, since it does cables, which is using for the tubing of houses locally. And also interestingly, we have seen many very much developments in terms of our grid. The Chinese who are setting up a steel manufacturing in Chivu, we're taking their electricity they're tapping electricity from Sherwood in Kadoma. So you find that there are cables which are running down there. And also interestingly, that our national grid, we lose a lot of electricity in our national grid. So we need to have a national ring fence that's anticipated, which speaks more into CAFCA, that in the future it's going to have a potential into which we can tap into, and the rural electrification program which is being done, which CAFCA will benefit from it. So the future is good for CAFCA, but the biggest challenge that most institutions we have is to find their shares in volume. But as for the retail investors, they can actually buy few shares of CAFCA that they can actually find on the board, which they can buy into their portfolio.
Yeah, thanks Zenzi for those sentiments. So moving over to our final counter for the day. This one is for you retail investors. You remember it is one of the top performers last year, NTS. But not so much this year. It is highlighting that there was a decline in their sales volume, and they are highlighting that this was caused by currency shortages. Zenzi, what's your take on NTS?
The NTS business model looks very interesting for me, but the biggest challenge that NTS is facing is the Chinese that have made shops in town, who are dotted across town, who are selling very cheap tires. Also, people are selling second-hand tires which are being smuggled through the borders into Zimbabwe, which is causing a very huge sales volume decline in NTS. Also another interesting is the type of customer which NTS is also facing. NTS is now having most of their sales from the formal channels, and since most of the individuals who are in the informal market are buying from from the cheaper alternatives which are in town, because you find that R13 tires in NTS, you find them for $55 equivalent in RTGS, or you can use US dollars. But in terms of, you can actually buy those tires in cheaper in town for $30. So in terms of seeing the sales volume picking up for NTS, I don't think the sales volume will pick up. But in terms of their retrending business, actually is going to increase due to the logistics side of business that they service haulage trucks. And you see, with the opening up of borders, many haulage trucks are moving, and that speaks into their business that they are also going to have in terms of more retail. But in terms of, I don't see volumes increasing in terms of their tire sales due to many challenges which they face, and due to the operational environment that we have, I don't see them.
You have said a lot of things, gentlemen. So probably some of our viewers out there are not that financially literate. And I would pose this question to you, gentlemen. If your father is going to say to you, Zenzi, my son, I know you're now an analyst. Advise me, should I buy NTS or not? What are you going to say? And you here, Hilton.
For NTS, I don't recommend it as a good buy. It faces a lot of challenges. Foreign currency is going to be an issue going forward.
Hilton.
I share the same sentiment with Zenzi. In the short term, foreign currency is an issue here in Zimbabwe, and a business which is greatly affected by such an issue is nothing you would want to be close to. However, in the long term, NTS has always been a good performer on the market, given that there is currency stability in the country. For reliability, they offer services with warranty and guarantees, which you do not get from the informal traders. So, yes, you might, but not now. For now, keep your money or invest in something else.
You heard it from the investors. The person who taught me about the stock market told me to buy companies which produces goods and services that you use. So if you are somebody who uses tires, probably it's a company that you want to keep in your portfolio. So thank you guys for being with us up to the end. Don't forget to like, share, and subscribe on all our social media platforms. Till next time, cheers.